Well, what a way to close out the week. Markets finally caught their breath, and investors seem pretty happy about it. Hey everyone, it's Saturday morning, December 20th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. U.S. stocks moved higher yesterday, snapping a short losing streak as fresh signs of cooling inflation and a bit less anxiety around artificial intelligence helped lift sentiment on Wall Street. The Standard & Poor's 500 climbed about 0.8%. The Nasdaq jumped more than 1.3%, and the Dow Jones added around 0.3%. That late-week rebound was strong enough to push both the Standard & Poor's 500 and the Nasdaq into positive territory for the week, while the Dow still finished slightly lower overall. Technology stocks were back in focus. Oracle shares jumped after news of a deal tied to a U.S. TikTok joint venture, helping stabilize a sector that's had a pretty wild week. Confidence in the artificial intelligence trade also got a boost after reports that U.S. authorities are reviewing potential chip sales to China, which investors took as a cautiously positive signal. Outside of tech, there was movement on the policy front as well. Yesterday, several pharmaceutical companies reached agreements with the Trump administration to lower drug prices for some Americans, in exchange for temporary tariff exemptions on their products. On the macro side, investors digested a backlog of delayed economic data, including jobs and inflation numbers from November. Despite concerns about data quality, the overall takeaway was fairly constructive. Softer inflation and a gradually cooling labor market have revived hopes that the Federal Reserve could continue easing policy next year. Right now, many traders are still expecting about 2 rate cuts next year, with some starting to price in the possibility of even more. Yesterday also brought an update on consumer sentiment, which showed confidence improving for the first time in 5 months. In the bond market, the 10-year U.S. Treasury yield moved up to around 4.15%, as global bond markets reacted to the Bank of Japan's interest rate hike, its highest level since 1995. And finally, a quick calendar note, U.S. stock markets will remain open on December 24th and December 26th, despite the federal government being ordered to close on those days. So, a calmer finish, a bit of optimism creeping back in, and now all eyes on how markets wrap up the year. Things will be a bit quieter over the next few days, so we're taking a short holiday break. We'll be back in the new year. Thank you to everyone who listened and supported the show this year, and I wish you all happy holidays and a great start to the new year.